great to have your company for the weekly this Friday, the 7th of May. I'm Jessica Amir, Senior Market Analyst here with Bell Direct. Well, last week we put the magnifying glass on the mining and energy sectors, and this week they continue to command attention from investors. Mining is tracking 2.8% up Monday to Thursday, while the energy sector trades 1.3% higher. But the elephant in the room, the tech sector, it fell out of bed, down over 8%. That's its biggest weekly pullback in 11 weeks. Now, we discussed this earlier this week, expecting the tech sector to pare back for two reasons. Firstly, the US Treasury Secretary hinted interest rates may rise. So given tech companies generally carry higher debt, their costs will likely rise, pressuring their earnings. Now, the second reason tech is pulling back is that some think their stocks are expensive and value is capped, because they've been trading at record highs, but earnings haven't quite caught up. So these dynamics fueled the fresh tech sector downtrend. Both local and US tech sectors are flagging red signals, bracing for technical downtrends, suggesting both sectors in the US and Australia could fall further. So ahead, not just quite yet, we think that there could be some tech buying opportunities on the table. But we'll keep you up to date as this unfolds. But more broadly, market fundamentals remain intact. US stocks expected to lift 10% in a year amid the global recovery and increased mobility, particularly in the US and the UK. And the Aussie share market also looks bullish too over the longer term. But short-term investors may be considering rotating their portfolio to stocks with stronger balance sheets and more earnings upside. Now, you don't have to go far to find potential winners, girls and guys. Just look at this week's best performers. Insurance stocks have been a standout, clawing back, I guess, from COVID-19's hit. Last week, we hinted insurance stocks were on track for a recovery as policy numbers are growing. This week, QBE shares rose 9%. IAG, Insurance Australia, up 5% Monday to Thursday. That is, both stocks are in technical uptrends. Take QBE shares, for example, just breaking out from a technical chart perspective. The pink 15-day average or moving average price has crossed above the 30-day. Now, this simply means QBE shares are likely to run higher. And QBE reported stronger than expected quarterly numbers. 5 brokers then came out restamping QBE as a buy, with price targets ranging from $11.50, with most forecasts being north of $12. Now, Credit Suisse thinks QBE will reach $13.30 in a year. Now let's take a look at IAG. It also had a bumper week following QBE higher. Now, IAG formed a sharp 3-day pull-up, and its 15-day average in pink crossed above its 30-day average, meaning it too could run higher. So it's fair to say the insurance sector is looking pretty hot. Market expectations are that this sector will see the biggest earnings per share growth, or EPS, in the year ahead. And remember the basics, earnings growth generally drives share price growth, right? Now, the insurance sector's earnings per share, or EPS, is tipped to grow 61% in 2022. Gaming stocks EPS, earnings per share, likely to lift 44%. Tech EPS growth expected of 32%. So for stock tips in the insurance sector, we spoke about IAG being in an uptrend, and guess what? UBS, Citi and Credit Suisse, like Insurance Australia, IAG with price targets ranging from $5.35 to $6. What about the gaming industry? Well, Bell Potter and Citi's pick is Aristocrat, ALL, forecasting the pokie machine makers' shares to rise to $40.60. Credit Suisse's pick in this sector is Tabcorp, TAH, expecting 14% share price growth to $5.70. So there's plenty to consider for the week ahead. Remember, if you do have any questions, leave them in the comment section on YouTube and we'll get back to you. Thanks for your company this week for the weekly, and thanks for your company across the entire week. I'm Jessica Amir with Bell Direct. From all of us, have a happy and safe weekend.